Welcome to Why Cities Inside the Mind of an Investor series. Why Cities cultivates an intergenerational innovation ecosystem for middle schoolers and beyond, supporting a diverse pipeline of tomorrow's founders and investors. Investors are a vital part of the startup community, and while there are plenty of resources about how to pitch or how the process works, it can still seem a little bit like a black box as to why an investor chooses to invest, not only to founders, but also to peer investors. And so we decided that we wanted to have many conversations with many different investors and to focus only on one investor at a time. Every interview is anchored by the same 5 questions, but each conversation is shaped through the follow-up questions influenced from the different lenses of our panel of hosts. Today, I am extremely excited to introduce our guest investor. Welcome, Yael.
Hi, delighted to be here.
Yeah, we're super excited to have you here. As we kind of go into this conversation, we want to hear about the journey, though. Hear about how you got to that point. How did you get to be the sage of angel investing? Please share. Tell us about that journey, and land, if you wouldn't mind, land on what is Yael's thesis?
Yeah.
What are the things that you focus on when it comes to making investments?
Sure. The best place to start is to kind of take it back to where all of you start, which is middle school. And I always say that part of what a journey is how many times you've had to pivot and transition over your life. And so just like the startup journey is a journey of pivoting and transitioning, I always like to say that's my career. It's like at any time, if you look at it, I was a completely different thing. I was focusing on a different thing. My product market fit was different. I was different. So I have a very non-traditional journey in that respect. I am Israeli by birth and started out in the mid-90s in a very much entrepreneurial ecosystem within the Israeli military forces, defense forces. And where that led to, those of you who like to read your history, is the 90s tech boom, right? That was when we were just getting communication technology. So I understood that very well. It was that's kind of what I did back then, a lot of telecom stuff, and a lot of that's where the first instant messaging and all of those old AOL applications came from. And that was the ecosystem that I was in. I was not someone with a strong technical background, but I was surrounded by people that had ideas, built them out, and then took them out into the world. And I helped the place I found myself in that journey was to help it push into the world. So I actually started out with a legal background, and I was doing VC work, like an investment work. I was doing a lot of IPOs back then, Israeli companies out on the NASDAQ. This is pre-internet boom. And decided, Israel's a small country. I was going to come to the US. I was going to start it. I was going to do a couple of years of real M&A and IPO work in the US for all of these companies. And then I was going to go back and do what I was going to do. And life takes its journey and the market crashed, right? The internet market, the tech boom, that's the tech bubble, crashed. And this is where you learn, right? Which pieces come forward, how do you take those skills and apply them to something else? And I moved a lot more into M&A. So those same old companies that were doing a ton of IPO work, that were doing basically VC funding, were doing much more M&A work, much more traditional corporate work. And I liked that. And I kept doing that for a while. And then life takes its own journey, and didn't want to stay on the very, deal after deal after deal corporate world, and moved a lot more into being inside companies and helping large corporate companies find, either within themselves, right, find that innovation within and build those people that you can develop inside companies. Because people sometimes think that you don't have entrepreneurs within corporate entities. You do. You can be an entrepreneur and you can be a founder on your own, and you can take that journey inside a larger envelope or umbrella. It's probably the better word. And so I did a bunch of time as corporate strategy and corporate development. And then we sold our company to an even bigger company. That was within life sciences. And it was life sciences because that was what made sense then in the Boston ecosystem, right? And so the industry was less of a focus. It was a happenstance. It was more about the process and the ideas and the how rather than the what. And that theme will continue as we go. Sean, you mentioned process. I'm big on process. And where that kind of led to was quote unquote forced, right? You leave a big company, they kind of ask you, please don't do anything for a while, we'll pay you, but sit on the sidelines. And so I did. And I realized that I like doing this for fun. So I started doing a lot more mentoring, and I was in a position to be able to do that and had the support system at home to be able to do that, and did a lot more mentoring and did a little bit of investing, but mostly mentoring at the beginning and advising. Some point along that chain, I decided that I really enjoyed teaching. And so I started teaching and working within the university systems and working with young entrepreneurs. Over time, more and more female entrepreneurs and female women of color who were having and kind of giving them the strength to say, no, you can do whichever job you want within this company. You're not relegated to marketing or HR. You're certainly, a lot of them had great technical skills, and they felt very, very strong in a lab, and they felt very strong over the patents. But running a company and doing marketing, no, you need somebody who has an MBA for that. And he was like, maybe you do, maybe that's not your passion, but you don't have to. And got more involved in teams to find their voice and their passion. And perhaps that is my thesis. My thesis is that it's about the founding team and what their passion is. Not every founder wants to be the CEO of a publicly traded company. Some do, some don't. And you have to invest in the company, recognizing that the founder has a passion, has an idea, and support that going forward, and be comfortable that that may not be what you want it to be, and support them through that journey. So part of my thesis is, how do you support those ideas to come to the forefront? If you keep doing the same thing over and over again, you're going to miss the idea. The ideas come from the most unexpected places. The ideas that change it are the people who don't see it in the same way.
It's awesome. So that's a very rich history, and I love it. Can I extrapolate that because of that varied background and kind of what drives you and sort of like how you want to support the founders? Does that make you, so I'm extrapolating that you're more of a generalist in terms of as an investor? And if so, or even if not so, if you can kind of elaborate on that piece of it, but then how do you also, given that you are crazy busy, limited bandwidth, how do all these different types of founders then get your attention, whether it's for like, yes, I'm going to read their pitch deck more, or I'm going to take this intro, or hey, within a submission of, I'm going to say, yes, I'm interested, check that box, versus no, I'm not, because that mechanic, that's always a question of mine that I wish I could read the minds of, as far as why interested, why maybe, why no.
Yes, I'm a generalist, but I am what I call a focused generalist. So at different points in time, I think that there are different areas that benefit from investing. And there are also areas that I say, I can't differentiate here, I'm out. So I was always out, like, I can't understand gamified apps. I don't understand them. I'm too old. Don't get it. I mean, I understand the concept. I mentally understand it, but I don't feel it, right? I don't have a good sense of what's going to work. And to me, that's one where scaling is about money. And so generally speaking, the same can be said about a lot of DTC companies, right? I don't usually invest in those areas, because to me, that's one where, are you the first to market fast enough? That's about
DTC,
raising a lot of money.
For those who don't know, DTC being?
Is direct to consumer. Direct to consumer. Thank you. So direct to consumer, like a lot of that said, I have invested in a few of those where I really, really like the founders. So if the founders grabbed something in me, I say, you know what? I like these founders. And even if this particular transaction I don't really understand, I want to stay in touch with them, and I want to invest in them, because I think they're bringing something different to this, whatever this is, right? I have periods of investors where I was the one that was doing the cold outreaches to people to try and get into that space, because I truly believed in it, right? And that's partially my answer on what do I do when I get all of these. Some of them are like, this is not a space I care about. Thanks, not my space. I move on. Sometimes I will forward it on, sometimes I won't. I am not bullish on cold emails through LinkedIn. I can't. It's too overwhelming. It's too much. I can't do the diligence on the person in a way that makes me comfortable. And so I usually just don't respond. And so this is actually something that I'm working on, because I find that most of the things that I'm seeing are coming through existing channels. And the problem with existing right, they're either through the multiple universities, they're through other contacts, they're through groups that I've associated myself with, somebody saying, hey, I don't really know about this, maybe you understand it. Because over time, you do develop expertise in certain areas. So I spend a lot of time in the life science sector. I do not have any medical kind of degree, but I know what the process looks like. I know where the pitfalls are. I know what the journey looks like, right? Back to that process question again. But it's not, so I will see those. My continuous challenge to myself is how to find people in areas and in places that don't have that initial access without opening a spigot that's so big that I get overwhelmed and I drown too. Right.
So
I don't know how many of you.
What's the first step that you usually go through that? Is that like speaking with an accelerator? Is it speaking with like a startup weekend? Is it finding a Vicky with the Y cities, or just going to a random meetup?
All of the above. So I don't usually do random meetups. That's more about me and my my emotional health. But so yes on accelerators, yes on Vicky. Again, sometimes it's targeted, right? Sometimes I'll say, you know what, I think great things are happening in Atlanta right now. I have zero ability to see into it. I'd love to be able to pull some of that out and pull it in. Sometimes it is through mentoring, right? So sometimes I will do speaking events with different investors on how to invest in things. And, I see people who are investing in those areas and I attach myself to them for a week or so.
Right. And it's not up to any one solo person, but I know that, from working with you, that's an area of passion of yours. One of my, hopes is that we can expand beyond, I think accelerators are great, but like you have to also have heard of an accelerator and that's even like a hurdle to some as well, right? And so like by the time you get to startup weekend or some of these, you've already overcome a certain set of hurdles already, right?
And
so
many of those institutional things are meant for companies that are supposed to scale up to a VC style company.
Right.
That is not the end all of what entrepreneurship is and what founders are and the kind of funding that entrepreneurs need and should and deserve.
All right. Well,
right?
So then if that's the case though, and as an angel investor who, because it's not a 501c3 that you're pumping money into, a lot of our guests have talked about so a surprising amount of angel investors, actually, at least I was surprised, did not focus on like the exit multiples, but a significant amount are saying how many wallets and how big are the size of the wallets of the potential exit opportunities, right? And so, yes, I agree that entrepreneurship is so much broader than that, but then if you put your investor hat back on, how does that work for an investor and what do you get out of it then?
Right. So I think there's two pieces there. I think one of them is differentiating between angel investing and VC investing. If you're investing somebody else's money, right? Or even people who call themselves angel investing because they're a seed VC, you're not. If you're investing somebody else's money, you have to look at the multiples. There's no question about it. That has to be your number one goal, is to maximize return.
Right.
I find that my view of angel investing is it is broader than that. So some of the ways that I do invest is I will sometimes speak to founders and say, you know what, you've got a great company. They're like, yeah, we want to do a SAFE. I'm like, a SAFE doesn't work for you. You need to do a revenue-based, right? I will invest in you if the instrument that I have means, it's almost like investing in a restaurant. If anyone's ever invested in restaurants or entrepreneurs, right? When you invest in a restaurant, and everybody knows that, you invest in the restaurant and you get an 80, usually it's 80-20, we can decide. So until you make the money back, I get 80% of the profits, you, the entrepreneur, get 20, and then it flips. It's a little more complicated, but let's say it's that.
Okay.
That's the standard way that every restaurant, not every, but that's very standard in the restaurant industry. That model works in lots of different ways, right? And sometimes that's my answer. It's like, sure, I'll write you a small check, because often it is small checks, but this is the instrument that we're going to use. or here are other places that you can get cash that way. Sometimes you don't want equity. Sometimes it is walking with somebody into a bank, because I have a better relationship with some of the bank managers, and saying, let's help you get a loan, because what you really need is a debt instrument and not an equity instrument. And then it's not coming from me. And to a certain degree lately, it has been investing in some of these investment platforms, right? So I invest in the platform that allows people to do that. So for example, I invest in a company that allows small businesses, tiny, to raise effectively bonds, right? They put it on their exchange and they sell bonds, which means they have a coupon. So you're paying interest, but instead of paying it to a bank, you're paying it to investors. And most of the investors in those businesses are customers. So if you have a food truck and you have a great following on Instagram, and you need another $50,000 to buy another truck or to upgrade your kitchen or whatever it is, and you can get $100 from your 50, right, each, and they get interest on that, above market interest, that is a way to put everybody's money to work, get a return for everybody that, that I think benefits the ecosystem as a whole. I certainly invest in that. Is that as big a piece as I think it ultimately will be? No, I'm playing around with it now. Yeah. I too am learning, but over time, I think that those types of investments are income derived. Angel investing is as strong as equity angel investing.
Yeah, you're not, shying away from liquidity. You're just finding a different avenue to get liquid on it. So it's not just about the multiple and getting a higher valuation.
Exactly. You're not going to get to 100x, but you're going to have, what many places will tell you in a derogatory way is a lifestyle business, right? Lifestyle businesses are the backbone of the economy, right? Having a business that generates revenue, that uplifts people, that creates wealth, that creates jobs.
That's mostly oftentimes helps to fuel the
everything.
Local community. Yeah, and it oftentimes helps to fuel the local community. It's a win-win-win.
And it is what generates additional investors. For every person that's going to exit, with a multi-billion return, they're not doing angel investing. At the end of that, they're putting their money in VCs. They're giving their money to institutions, right? Those big, the people who walk away and made millions and billions don't have the time to write $25, $50, $100,000 checks. It's not worth their time. They're going to give their money to, in the end, that becomes institutional money and not true angel investing. However, if you set up a chain and you opened up 3 food trucks and you're now making a sufficient living up, right? Maybe not 3, but some kind of franchise, and you now have a business that's generating real money, you probably are angel investing.
Going back to something you mentioned before was like diversity, and also like angel investing versus like VCs and these like big firms. How do you kind of like, I know diversity in founding teams is important to you. How do you think like these big firms and like kind of top down can like increase investing in diverse teams or even diverse ideas and problems?
Yeah, so I look at diversity as a much broader concept than diverse teams. I think the problem with diverse teams is people only look at the founding team. I think diverse team is who do you have in your executive team? And if you have one woman founder, but every single other person is a cis white male, that's not a diverse team. Even if you have one female founder or one person of color as one of the founders. So I don't actually necessarily look at the founders. I look at who's your top executive team, right? How are you looking at it? Diversity can be, what markets are you serving? So if you've got a company that maybe could work, because you can work on diversity in your team, right? I can be that investor that pushes you and says, you know what, let's expand the search, not to the people that you went to school with, but let's look elsewhere also. But if you're serving the needs of a diverse population, you're going to have better outcomes. To your question of how I see VCs and stuff, I think first of all, I think there's been a lot of improvement over the last, we'll call it 5 to 10 years. Not just in what they say, but in what they're doing. I think the first to benefit from that are actually female founders, and to a certain degree, it still lags horribly behind femtech, right? So technology focused. Now, let's be clear, it's not done because anybody believes that it is the right thing to do. It is done because when you look at the demographics of the United States and where the money is, my generation of women are beginning to hold all the wealth, right? So catering to me is in the interest of Fidelity, Morgan Stanley, Bank of America, but also every startup and every VC knows that. They know that that's where the cash is. And that's why they're, right? The reason that there are so many companies right now looking at menopause as a real problem, you don't need to know about it. Once you get to a certain age, it becomes an issue.
My mom's a gynecologist, so
Not quite
I know a lot about this stuff.
yet. Focusing on, again, focusing on femtech, on menopause related products, on how do you create retirement accounts that, right, kind of how do you cater to female in fintech? How do you cater to women investors and not just men? In the same way that there is more Black investing right now, right? The focus on investing has been is more, so there's more focus on Black men investing than there used to be historically. So some of it isn't the diversity isn't do the right thing. It is because there is sufficient demographic evidence that that's where the money is. So I think that's part of it, and that's a lot of where the VCs are coming at it from. And then there is a lot more micro VCs, right? Really, really small VCs in relative terms. So it's still a lot of money. They still have millions of dollars each, but in relative terms, they're small, that are focused on certain founding teams.
So between the diversity piece and the fact that you go after a lot of different types of investment, not just sort of equity as an angel, how do you sort of define the difference between like a good business versus a good investment as an angel investor versus we've sort of started to bring this one in, especially with your life science and all those different backgrounds you've dealt with, but just a good science project, you know, how would you sort of differentiate between all of those pieces?
So my first thought is that a lot of it comes from the passion of the founder. And it is opening the founder's ideas to what is it that they want to do and how do you move from that, right? Because a lot of times, especially around science, you'll have a founder that is passionate about a problem, right? They like their little science project and they've created a fantastic solution for that science project. However, that project, what it's going to take to bring that project to market, or what it's going to take to bring kind of the ultimate problem that solves, isn't viable in today's ecosystem for a whole host of reasons. And so the answer there is sometimes it's partnership. Go sell your idea. Just go sell it.
So a lot of it is
IP is something
points,
you can
right?
sell.
It's proof points that like traction.
It's not even. It's at to what point do you have to bring it in order to be able to sell it, right? And that depends on what it is and what kind of returns you want and who wants to buy it, right? All of those are on the table. Sometimes that doesn't work because if you've got somebody who's really passionate about a problem and they believe they're the only ones that can bring it, right? That can shepherd it, that somebody else will just table it, they won't focus on it, that creates other issues. And so that's kind of how I deal with things that I think are just a science project. I very much distinguish between a feature and a company, right? Sometimes what you're doing is it's a great little feature. It's not a company. And unless you can show me how you're building this out, that rarely happens in healthcare. That's much more applicable in other areas. Unless you can show me how this grows and what else goes with it, then I won't put equity money behind it. And you showing me how big the company, sure, a lot of people want this feature, but it's then what? Because part of the thing of a company is it's not one solution and it's not one product. It's one and then another and then another and then another and then another.
So how does somebody prove to you that they are not a feature and that they are actually a company?
Sometimes the solution tells you yourself, right? Sometimes what they are building in and of itself kind of encompasses lots of pieces of that,
Is-
right?
is
So they're
it-
not a feature.
Can you give it an example? Is it like a whole kind of little bundle of something? Is it that it's can scale in a variety of different ways? What are some of the either specific examples or maybe more categorically?
Right. So it's the difference. So sometimes it's the classical difference between a better mousetrap, right? If what you're doing is really building a better mousetrap, is this something that every current manufacturer of a mousetrap can just take and tag onto their existing mousetrap? In which case it's probably a feature. Or does this mean we have a completely different way to approach mousetraps? We're not going to use all the other mousetraps. We're only going to use your mousetrap. And that can be sometimes the difference between a feature and a company. Are you building mousetraps, or do you have a different kind of spring that everybody's going to put into their mouth? Now, I want to be clear, that's a $1 billion company because it's a spring. But the way that spring, if it's just one spring, we're not going to keep making different kinds of springs, is going to exit through M&A, right? Somebody's going to buy that spring and sell it to everybody else. If there is a founder that I know is going to resist M&A, that they want to see it to the end, and their passion is to be a public company CEO, that's not me. I, by the way, also look at who the founder is and who their other investors are. When you invest in a company as an angel investor, you're getting into a long-term relationship, which it's very difficult to exit from until that right? And in most cases, that relationship, it is till death do you part, because that's what happens, right?
Yeah.
I care, quote unquote, who I'm in bed with, right? Not because I necessarily will interact with them. I can be passive and decide not to interact in that particular company or not to put any more of my energy into it, but because it's part of my reputation, quote unquote, right? That's who I've associated myself with. And I don't want to bring that. And sometimes I absolutely know that the product is going to come to market. I know it. I know people are going to put money on it. I know I'm going to see it on the shelf, and I won't invest because it's not something that I believe in. I can do that because I'm investing my money, not somebody else's money. Yeah. If your ultimate goal is simply financial return, that is not the right way to angel invest. It's my way to angel invest. And again, that is because I'm unbelievably privileged to do this as, yes, absolutely for the financial return, but also not as an existential issue. And that's my privilege, which I understand.
So one of the things that we have been asking, certainly all the folks that we've been interviewing, and I kind of feel like I might have your answer already, but I'm going to ask it anyway, centers around, is it about kind of the horse or the jockey? Is it about the product of the team? Tell us a little bit about, and we want, one of the things, and Vicky will say, typically say, we don't want it to be gray. We want it to be very binary, one or the other. Which one is the thing that you latch on to when it comes to that coming
Vicky,
together?
you killed it, because I was going to say that it doesn't. So no, but actually it's not about the gray. I'm actually not, it's not gray. I'm going to add, I'm not going to make it binary. I'm going to add, yeah. I'm going to add something to this. Okay. It is about, does the jockey complement the horse, or the horse the jockey, whichever way you want to look at it. Because the horse and the jockey are a match. And there can be a great founder with the wrong product and a great product with the wrong founder. You need to have, so the founder product fit.
Yeah.
Right.
Yep.
Is there a founder product? So I need to see a founder product market fit.
That's great, because I always teach that, because it is that is in a way a competitive advantage as well, like what you bring to it. And another guest that we had interviewed had one of the questions was like, why you, right? Like, why you to solve this particular problem?
Are you the right team to take? I mean, you'll often hear, is this the right team to take this to market? And there are lots of answers. Is this the right team? Often people will focus on, is this the right team that can raise the right amount of money? But usually you can raise the right amount of money if you're passionate about a problem and you can show that you understand it and that problem is real, you'll find the money.
Yeah.
It is, are you passionate about this, or were you just bored and this is the person you got kind of mapped with, and this was your, that took a life of its own? Do you understand your customers? Or even if you're not from that customer base, even if it, are you passionate about that customer base? Whatever it is, but there needs to be a connection between the jockey and the horse, to go back to your metaphor, before for me to think that this is where this is what I want to back.
I stole this, but there's typically 4 questions that I'll ask, and it's, generically, what are you working on? Followed by why you, third, why now? And then, like, what's your unfair advantage? And I hope that through that very quick 4-question line of, 4 questions, that I can get a sense for this individual's passion for this opportunity, and ultimately what's going to give them the time they need to see it through. That internal fire, as well as that advantage to see it through, and stuff, and that ultimate that it lands on them to make it happen.
Yeah, I will say that one of the things that has surprised me over the last 3 or 4 years is how many founders, their missing piece was to attract and retain a team.
Mm-hmm.
Right? They were okay when it was the 5 founders and so forth, but once they needed to scale up to a large team, their ability to hire, to identify who the right people to join their team was, their ability to fire, to recognize when somebody wasn't a good fit and be the bad person and say that, it's not a pleasant experience for anyone. But their ability to do that, their ability to motivate people, and to find the right people that have their passion to come through, that's a skill, right?
Right, but that comes later on in the phase of the startup. So that's not something that you can necessarily recognize in the early stages that angel investors invest in, though. Or do you have some telltales that
surprising? So that's one of the things that I now, kind of to Sean's questions, right? Some of my questions nowadays are, who else do you need? Right? Who are you looking for? What are you looking for in your next hires? Even if you don't think it's going to be for another 6 months, 12 months, whatever. Who is it? Give me not a name, but not a name and not a job description. Like, tell me who that person is.
Right.
And sometimes those questions are, I love the questions. I learned it from somebody else. I stole it, but it's what keeps you up at night. Because sometimes when you understand what people see as the risk to their business, you actually understand. It gives you a lot of resonance of, do they understand what their business really is, right? Not what the product is, but what the business is. In the last, I'd say a little bit now, but the hiring environment, when it's difficult, part of the answer should have been that I get the right team around me, that I find the right people.
Right.
That should be keeping you up at night.
That was great. So I would like to bring this conversation to a close. So yeah, thank you, Yael, for a very insightful conversation. So that wraps up this episode of Inside the Mind of Investor. Thank you so much.
Thank you. I've enjoyed it. So thank you.